What if I told you that the US dollar, the backbone of the global financial system for decades, is slowly losing its grip on the world? It might sound unthinkable, but the process of de-dollarization is already underway, and the cracks in the dollar's dominance are becoming impossible to ignore. From shifting global trade policies to rising debt and fiscal instability, the world is quietly but steadily moving away from the dollar. And here's the kicker. This isn't just about one currency replacing another. It's about a complete reshaping of the global financial order. In today's video, we're diving deep into the forces driving this monumental shift. We'll explore why countries are ditching the dollar, how this impacts you directly, and most importantly, what you can do to protect yourself in this new financial era. Trust me, you don't want to miss this. Before we get started, make sure to hit that subscribe button and give this video a thumbs up if you find it valuable. And don't forget to share your thoughts in the comments below. We'd love to hear from you. Now, let's get into it. The cracks in the dollar's dominance. Let's start with the big picture. For decades, the US dollar has been the undisputed king of global finance. It's the world's reserve currency, meaning countries around the globe hold dollars to facilitate trade and stabilize their economies. But here's the twist. That dominance is no longer as secure as it once was. In 2016, the dollar accounted for 66% of global reserves. Today, that figure has dropped to 58%. While this decline might seem small, it's part of a much larger trend, a slow but steady erosion of trust in the dollar. And it's not just about numbers. The behavior of global markets is changing in ways we've never seen before. Typically, during times of economic uncertainty, investors flock to US Treasuries and the dollar strengthens. But recently, the opposite has been happening. When markets faced turbulence, instead of a rally in Treasuries, we saw yields rise and the dollar weaken. Even the co-founder of BlackRock, one of the world's largest asset managers, called this behavior far from normal. This shift is a warning sign that the dollar's role as the world's safe haven is under pressure. But why is this happening? To understand, we need to look at the policies and decisions that have shaken global confidence in the dollar. One of the biggest factors driving de-dollarization is the US government's fiscal irresponsibility. Over the past few years, the Federal Reserve has been printing trillions of dollars to finance government spending. While this might seem like a quick fix, it comes at a cost. The national deficit is alarmingly high, sitting at 7% of GDP, more than double the reasonable target of 3%. This kind of overspending erodes trust in the dollar and makes other countries question its long-term stability. And then there's the issue of rising debt. The US government is facing a mounting debt crisis, with interest expenses climbing to unsustainable levels. As borrowing costs rise, the government's ability to manage its debt becomes increasingly precarious. This isn't just a domestic problem, it's a global one. When the world sees the US struggling to manage its finances, it sends a clear message. The dollar might not be as reliable as it once was. But fiscal irresponsibility isn't the only issue. Trade policies have also played a major role. Take, for example, the tariffs introduced during the Trump administration. These tariffs, designed to protect American industries, ended up alienating key allies and trading partners. Countries that once relied heavily on the dollar for trade are now looking for alternatives. And as trade with the US decreases, so does the need for dollars. This creates a domino effect, where countries sell off their US Treasuries, driving down their value and pushing interest rates higher. Here's a real-world example. When Trump introduced reciprocal tariffs, the bond market experienced its worst week in decades. Bond values fell, yields shot up, and financial markets were rattled. This instability forced Trump to pause the tariffs for 90 days, but the damage was already done. The bond market's reaction was a clear signal that the dollar's dominance is no longer guaranteed. Now let's talk about what's replacing the dollar. Contrary to popular belief, the dollar isn't being replaced by a single currency like the euro or the Chinese RMB. Instead, it's losing ground to a basket of multiple currencies. The Japanese yen, British pound, Canadian dollar, Australian dollar, and others have all gained small shares of the global reserve market. This diversification reflects a growing lack of faith in the dollar and a desire for more balanced reserves. But here's the twist. This isn't just about economics, it's also about geopolitics. Being the world's reserve currency has given the US significant advantages, from lower borrowing costs to geopolitical leverage. The dollar's dominance allows the US to impose economic sanctions, influence global trade, and maintain its position as a global superpower. But as countries diversify their reserves, they're also reducing the US's ability to wield this power. Take China, for example. While the Chinese RMB isn't ready to replace the dollar, China has been actively promoting its use in international trade. Through initiatives like the Belt and Road Initiative, China is encouraging countries to trade in RMB instead of dollars. This is just one example of how countries are working to reduce their reliance on the dollar, and it's a trend that's only gaining momentum. So, what does all of this mean for you? The decline of the dollar as the world's reserve currency has far-reaching implications, and it's not just something that affects governments and central banks. It impacts everyday people like you and me in several ways. First, as the dollar weakens, inflation becomes a bigger concern. When the dollar loses value, the cost of imported goods rises, making everything from groceries to electronics more expensive. This erodes your purchasing power and makes it harder to maintain your standard of living. Second, rising interest rates can make borrowing more expensive. Whether you're looking to buy a home, finance a car, or take out a loan, higher interest rates mean higher monthly payments. This can put a strain on your finances and limit your ability to invest in your future. Finally, a weaker dollar can lead to greater financial instability. As countries sell off their US treasuries, the bond market becomes more volatile, increasing the risk of a financial crisis. This kind of instability can have a ripple effect, impacting everything from stock markets to retirement accounts. The good news is that there are steps you can take to protect yourself in this era of de-dollarization. The key is diversification. Precious metals like gold and silver are excellent hedges against currency instability. Personally, I prefer silver over gold because it's more affordable and has a wide range of industrial uses, but both are valuable assets to hold. You can invest in physical gold and silver or buy them on the stock market through ETFs like GLD for gold and SLV for silver. While physical metals offer a tangible sense of security, they may not be practical for everyone. Choose the option that best suits your situation, but remember to approach these investments with a long-term mindset. Another way to diversify is by investing in foreign currencies or international markets. By spreading your investments across different regions, you can reduce your exposure to the risks associated with a declining dollar. And finally, stay informed. The financial landscape is changing rapidly, and staying ahead of the curve is crucial. By understanding the forces driving de-dollarization, you can make smarter financial decisions and protect your wealth in the years to come. The decline of the US dollar as the world's reserve currency is more than just a financial story. It's a seismic shift in the global economic order. While the dollar isn't being replaced by a single currency, the move toward a basket of alternatives signals a growing lack of confidence in the US financial system. Factors like fiscal irresponsibility, rising debt, and alienating trade policies are accelerating this trend, and the consequences are already being felt. But here's the key takeaway. While you can't control global markets, you can control how you prepare. Diversifying your investments, whether through precious metals, foreign currencies, or international markets, is one of the smartest ways to protect yourself. Gold, silver, and other tangible assets offer a hedge against the risks of de-dollarization, while staying informed ensures you're ready for whatever comes next. The world is changing, and the cracks in the dollar's dominance are only growing wider. By taking proactive steps now, you can safeguard your financial future and navigate this uncertain landscape with confidence. If you found this video helpful, don't forget to subscribe, give it a thumbs up, and share it with others who need to hear this. And let us know your thoughts in the comments below. We'd love to hear from you. Thanks for watching, and we'll see you in the next video.